Welcome to the fourth video in our analysis series. Today is September 30th, 2025, and we're looking at the daily time frame. We can see a strong candle forming, with about 3 hours left before it closes. So far, it doesn't tell us much, other than showing a bullish bias. Let's move to the 4-hour time frame. The first thing we notice on the 4-hour chart is that the trend line we had has now opened the way upward, and that cannot be ignored. But more importantly, on the daily time frame, we see a lot of divergence. Multiple divergences in a row, which makes the situation a bit complicated. On the 4-hour time frame, the market recently dropped about $70, creating a heavy correction. Still, as we saw in the previous series, the Kijun line has turned back up. That suggests the market may see more decline. I expect that these divergences could push the market into giving us a solid correction. But before we talk about that correction failing, let's first discuss the buying zones. On the 30-minute and 4-hour charts, we have two key support zones that are very important for us. They sit around 3,788 and 3,782. These are critical areas, and we can see the market has already reacted there. I also expect that, with the possibility of the U.S. federal government shutting down this week or next month, the market may test these zones with a shadow. So our main buying area for the coming days will be this confluence of the trend line and those two important supports. Now, about the failure of the correction scenario. If we close above the bearish engulfing candle that formed, the bearish outlook might fail. Because that candle is very important for sellers, and if buyers succeed in closing above it, the correction scenario and lower buying opportunities are canceled. On the 1-hour time frame, the sell-off was sharp, while the bounce upward wasn't that strong. So again, we can expect the market to give us a correction. The best correction zone, in my view, is one where we can see a logical and healthy retracement. That makes buying safer in this box zone. And the price levels there are good areas for accumulation. Looking at the 2-hour chart. Despite the market's strong attempt to push up, we still couldn't close above that engulfing candle. Sellers are clearly applying pressure. So this zone remains resistance until we close above it. For now, and against what many expect, I prefer to say that unless we break this zone, we're likely to have a reasonable correction downward. If we take the best-case scenario, we could then rise from that correction toward 4,000, 4,100, or even 4,500, because the market does have the stability for such levels. So, in summary, as long as we're on the 1-hour and 4-hour charts, and as long as the confluence zone of the 30-minute and 4-hour supports, 3,778 and 3,767, remains intact, any returns to those levels are our buying zones. and they are very strong buy zones. Personally, I hope the market gives us those zones because I'm waiting to add more positions around there. If it doesn't, that's fine too, especially since today Trump gave a speech. And both the US and the UK have sent unusual fuel convoys toward the Middle East. The market isn't very stable right now, but remember, unless we get a valid close above that bearish candle on the 4-hour chart, even 1 pip higher, we still have the possibility of a correction from this zone. Thank you very much for being with me. If you enjoyed this analysis, don't forget to like and subscribe.